Hey everybody, welcome to Trading Capital. It is May 5th on this lovely Thursday. Jumping right into natural gas, it has truly been on fire. You can notice here in the chart we've had 1, 2, 3, 4, 5 green days in a row, and they've been substantial moves, in terms of natural gas. Where will it stop? Well, I don't think anyone knows where it's going to stop, but trusting the technicals, we are into the major resistance levels. I know we've been drawing trend lines everywhere to see which resistance level is going to work, but that's what you have to do sometimes. Sometimes the first resistance level, the second resistance level, even the third, even the fourth don't work. But finding resistance is going to give you the best shot at being right in on your trade. And I still trust the fundamentals too, in the sense that the natural gas, it is the building season for the reserves. Yes, we are under the 5-year average. Yes, we have a war going on. But ultimately, I think the worst of the natural gas is priced in. Countries have now had several months to deal with basically finding alternative natural gas supplies. And although you can't turn natural gas on with the blink of a switch, it stands to suggest that I think countries in the near term are going to start rolling over and paying Russia in rubles. When you factor in that how much wealth destruction is happening, especially in Europe, where our natural gas prices have risen, and I'm going to go over a little cycle period comparing it to the greatest natural gas gain cycle in history compared to what we're going through now. And believe it or not, what we're going through now is very darn similar to the biggest move in natural gas has ever occurred. So I certainly think countries are going to start paying for Russian natural gas to help offset the costs. Maybe it's not going back to their full quota, but I think we can expect something. When you have natural gas prices in Europe quadrupling, you have them here in North America, the UNG basically doubling and then some. It's truly, truly astonishing how severe energy prices can be in terms of the inflationary aspect and how destructive it can be in terms of economic destruction. So looking at natural gas, again, it's gone completely parabolic. You did have this small bounce off of support, and now you're heading right into that resistance. But zooming out on natural gas, you can see we've been trading in this channel here for basically since 2017. And why I started this channel here is this was basically your topping pattern here on natural gas in the 2016-2017 cycle. Here you made your pivot on your left shoulder. Here's your neckline. You broke your neckline, and then months and years later, natural gas ended up having a decline, but ultimately started a new cycle, hit the top of this channel, and then slowly started going all the way down until you found support at the low range of this channel, bounced up, support again, bounced up, which was this previous cycle of several months ago. And notice how you've basically run into the center point of this channel. So this to me is the cycle is halfway completed at this point. And then you retested back all the way down into support, and now you've blasted up to complete the full move in the cycle. And it stands to suggest that the full move will likely be at the top of this channel, which we're very, very close to. And not only is it going to be the top of this channel, but it's also going to intersect with that whole $9 number on natural gas. I think that psychological number is going to be a big level for traders and investors, like it always is. But there's tons of resistance up there, and I know we've drawn resistance line after resistance line, but another steep resistance line that was just tagged today was this one over here. My apologies, it wasn't tagged today. Let me do that again. So you're extremely close to be tagging that resistance line. Only a matter of time before you do. I believe you did tag this one over here today. So you have a lot of trend lines confluencing in a small area, which is going to act as even more resistance. So basically you have these two steep trend lines, obviously one steeper than the other, that one you haven't tagged, and you have the top of this channel, the cycle channel that you've been trading in for several years now. So let's just erase all of that, and we can basically keep doing the analysis. If I take you on an intraday basis, It's also interesting, the price action. What we're seeing is very similar to oil. We're seeing this broadening formation occur. So not only are we seeing this broadening formation on a larger daily time frame, but we're also seeing it intraday. So this is the first intraday action going from May 3rd, so 2 days ago. And whenever you see this widening megaphone broadening formation pattern, there's a very, very strong likelihood it comes back down to test the low range of this channel. And then even if we zoom out, again, you can see that there's even a bigger broadening formation occurring at these levels. So again, you have your mini one inside there, you have another bigger one. And then if you zoom out even more on the charts, basically this whole thing, this pattern here, connecting these to here, is also what's known as a broadening formation. So you have really three different broadening formations on different time frames. You have the short-term, medium-term, and longer-term broadening formation occurring. Eventually, with that many broadening formations, one of them is going to break. This type of move is, yes, it has the fundamental backdrop of war propping it up, and that's certainly why it's had this run, but you have to respect the probabilities. And the longer natural gas pushes higher and higher, the more likelihood of it having an even larger collapse. That's why I'm just going to stay the course. You know, we're down on our natural gas shorts at the moment, but that's okay. I'm prepared to add maybe a little bit more if it goes higher. But I do think you pull in the reserve building season. You're coming at the end of your cycle top. And ultimately, when you compare, let me just remove all these lines again so it's a little bit easier to see. Okay, let's go back to the daily chart. So ultimately, what we've been in since the cycle low here in June 20th to today, it's roughly been 682 days of upside momentum for natural gas. And you've risen roughly in the 682 days, you've risen roughly 495%. Okay, in roughly less than 2 years. That's a substantial increase in price. And then when you compare it to the largest natural gas gain ever recorded in history, it brings us to this event here, starting in the 1999, going all the way till the end of 2000, where you started putting in a top. And that move occurred over a 669-day period, and you roughly moved 520%. So that's the biggest move natural gas has ever experienced over roughly a 2-year period. You're in and around the same time frame as the current cycle with natural gas. So right now we're at 679 days, 495% up, and basically the most natural gas has ever moved is 672-day period, up 520%. So we're into that cycle time threshold as well as the threshold of the max percentage move. And often you see assets like to reciprocate these similar moves. And then if we also count, this is now the weekly chart. If you count natural gas from basically its initial run up to its bigger pullback before having this blast off into all-time highs, you had a weekly time count of 1, 2, 3, 4, 5, 6 weeks of upside. The 7th week, you had your major distribution sell signal. The 8th and 9th week, you had that momentum that just kept you hovering at the top of the all-time highs. And then the 10th week, your selling commenced sharply. So 1, 2, 3, 4, 5, 6 candles to the upside with your 7th distribution signal. Let's compare that to today's cycle that we're currently experiencing. So again, we're on the weekly chart. Starting from the first pullback candle before you started going all the way up to your all-time highs or your interim highs. 1 candle, 2 candle, 3 candle, 4 candle, 5 candle. Your 6 is your distribution candle. So in the previous cycle, you had 6 candles up with your 7th candle being your distribution candle. Here we have 5 candles up with our 6th candle, weekly candle being our distribution signal. And then you had 2 more additional weeks in the previous cycle, in the cycle 1999 to 2000, of 2 more weeks of upside. So we're very, very close to fulfilling yet again a same cycle pattern. And the fact that we're heading into the building season, I think the fundamentals do support that. Maybe we don't go to the low of this channel because you do have the aspect of the war. So typically in a completed of a cycle, you would hit the low range again. Maybe it's just that we find a new level of support on natural gas. You know, a big one that we could potentially watch is this trend line going all the way across here. So that would be a huge, huge level. Now, I probably won't hold my short all the way down there, but I do think eventually you hit that level. That's the pivot high in 2018. So just keep that in mind. Natural gas is a powerhouse. However, there are signs of negative topping patterns occurring. We just have to kind of wait and see what happens. It's interesting that this candle, again, this is only an hourly basis, so I don't even want to hold too much weight to it, but a little bit of a topping signal here, and you tried blasting through it, but you failed to close above it over here, so this topping tail is still in effect on an intraday basis. Could natural gas push up tomorrow to hit that $9 level in the top of this channel? It certainly could, but again, I'm still thinking we're going to have that sharp move down any day now. So just be patient, stay the course, and we'll just have to ride out natural gas. I do think we're still in a great average to profit tremendously, but let's just wait and see.